Services. We thank you so much for joining us again to donate. It's Sally Kate Winters, all one word, .org. And joining us now, Jim Leggette, lecturer of economics at Mississippi State University. Good to finally meet you in person there, Jim.
Eyeball to eyeball. Doing good. How about yourself?
Yes, sir. Doing great. Appreciate you coming on. Was just checking starting out from an economics perspective. Today's JOLTS report from the U.S. Bureau of Labor Statistics. That, of course, is the job openings and labor turnover summary. I'm not sure. It seemed like some conflicting data there. I'm not sure that it was too instructive. Of course, we know the Fed is looking for there to be an increase of unemployment.
But not too much.
But not too much. That's right. They don't want the so-called hard landing.
Yeah.
And it does appear that we've got a slight decrease of job openings. But overall, not really a lot of change.
No, I think the good news is, inflation is 5.5, which is better than 9, but not where you need to be.
Yeah.
And I think what you're highlighting in that statistics is maybe we don't know which way is happening.
I really don't think we do.
I know it, and I'm glad you and I don't have to actually make a decision. We just get to talk about it.
That's right.
But I think there was always an uncertainty, and I think the implications of that bank failure, Silicon Valley Bank, which is one of the biggest bank failures ever, is still raising its ugly head. And I think if you kind of dig into why that bank failed, it's a combination of the wrong kind of regulation, and they had set up a business based on low interest rates, and then that changed on them overnight, and I don't think they were able to adapt quick enough.
Well, I agree with you, and you know what really astonished me once the SVB failed, and we started seeing a lot of data about their loan portfolio, and of course then their investment portfolio, both of which were bad, honestly. So, which I think ultimately is what led to failure. Of course, that calls to mind, well, where were the regulators? Where was the supervisory role of the Fed? Because they should be aware of that sort of stuff and watching out for it.
That's what all these stress tests and all that stuff was about.
That's what it's for.
And I think it's probably, the Fed, like everybody else, military analogy, we're still fighting World War II, but that's long since gone. And I think the other thing, you were talking about their portfolio business.
Yeah.
A buddy of mine had just retired from a high-tech company that failed.
Right.
And that was the only bank that would do business with them.
Yeah, and they had a lot of those kind of customers as well, borrowers.
And I kind of could have gone to those guys with a straight face and peddled it. And he said, well, I have to.
Well, when I was, it's been a long time, but when I was out looking for capital to start my business, which was a startup with air, no assets and nothing but
a vision.
Yeah, that's it. And a young guy that was willing to work hard to do it, but that don't get you a loan, as you know. What happened to the old concept of asset-based lending?
I kind of thought that's what all these regulations.
I did too. That's what it was supposed. But they weren't loaning money here on assets. They were loaning money on the prospect of repayment of the debt through cash flow. Well, you got a brand new startup business. You got no assets to pledge, and you don't have any security. That's just not going to work.
Well, and that's what my friend's company did. They basically pledged their receivables.
Yeah, what receivables? You got to sell something first.
At a handsome fee, and I'm sure that was not a unique part. And then I think it got hammered again when their interest rates went up, and they got so it was a train wreck waiting to happen. The good news is I think it's contained. The FDIC's probably took a $40 billion hit, and whoever ended up buying them probably took another haircut. So I think it's contained, but I think what you're really saying, bank failures are scary things.
Yeah.
We thought that was something you only thought about in the Great Depression, but 2008, we came real close to busting the FDIC. So, and if you kind of look in the nature of banking, that's kind of it's baked into it.
There was a somewhat of a run. I don't know if I'd call it a run, but let's just say there was a lot of folks that withdrew their money.
Yeah.
I think some $90-100 billion in like a week or so. But I think they just moved it to other banks.
That's right, yeah.
It just flowed into the 4 or 5 largest banks in the country.
Yeah, and then because they're probably more stable, or at least bigger. And then you go, well, so why didn't you insure it? But if you're running a business of any size, $250,000 operating,
it's nothing.
Doesn't get you anywhere.
It's nothing.
You know. So bank failures are scary things. And in fact, is literally right before we started spring break, I lectured on bank failures. And there's a scene from Jimmy Stewart, how he saved a bank. Little did I know, as I was speaking about this, it was actually happening. A buddy of mine that went sailing with said, what about Silicon Valley Bank? Well, I hadn't looked at news in 12 hours. And it's like, wow, thank you, Wall Street. Thank you for the material.
Well, so, with respect to the economic outlook,
yeah.
I'll just share with you Jamie Dimon, who I think is an excellent CEO, maybe the best in the country, certainly the best, in my view, bank CEO. He's
had a
very long tenure, very successful. Well, a few months ago, he was pretty down. I mean, he was really predicting dark days for the economy, doom and gloom. This morning, or yesterday late, I should say, it was reported this morning, he made comments, used the word sunny. He has a sunny outlook. They're calling him Sunny J.P. Dimon. So why do you think the pivot there?
Maybe we got through that rough, what could have gone really bad.
Could be.
And then I'm somewhat encouraged about the maybe we are achieving the soft landing. We talk about this in a year, you're going to tell me I missed it, and that's okay.
Well, that's why we always talk about economists. You have to have two hands, right? It's always, but on the other hand, so that's
and there's another joke I like to use about forecasting. You give them an event or a date, but never the two simultaneously. Like I can predict the Final Four, I just can't tell you what year.
I tried that on Wall Street. It doesn't work very well. They want all the above.
Yeah.
But here we are. So we're starting to see what appears to be inflation moderating. However, with OPEC cutting production, you're already expecting 15-20% increase in the price of gas here in the short term, right as we head into the summer driving season. Well, that's a big part of top-line inflation.
That's right. And that's the one the average person, sees. They don't care about CPI. They just see those numbers.
Yeah, because you see it all over the signs on the road, right? I mean, that's kind of your gauge of how's inflation going, and you sort of look at the price of gas, and then, of course, when you're in the grocery store, I think that's the other big gauge. But I don't know. It seems like we need some fiscal policy bad. We can't rely on monetary policy.
Well, and we shouldn't. And one day there's going to be a reckoning. I hope it's not in my lifetime. But, there's you ever heard of a guy named Herb Stein?
I have not.
He's the comedian Ben Stein?
I do, yeah.
That was his dad, who was serving on Council of Economic Advisors with Nixon, taught at UVA.
Okay.
And he has a line, if something cannot go on, eventually it stops. And just pondering, all the fundamentals are against it. Our political system is almost incapable of dealing with it, not just the personalities, because of all the incentives baked in. But one day there's going to be a reckoning, just because that's how these things work.
Yeah, I agree with you as well, but there doesn't seem to be any appetite in Washington to address the deficit or the debt. For the most part, Democrats want to increase taxes as a way to address that, and Republicans want to decrease spending, and so we're just in an impasse, and nothing happens consequently.
And then the last guy I thought had a serious plan, and he was one of my favorites, and maybe it's a sad commentary about our political system. He ran out tarred and feathers, Paul Ryan.
Yeah.
He had a reasonable plan.
He did.
I thought it was workable. It was tough. I mean, tough in the sense to implement.
Yep.
But it was what you needed to go do.
Yeah, absolutely. We've been talking this morning about Social Security and Medicare, which I still believe is the elephant in the room that nobody wants to touch.
Yeah.
But speaking of day of reckoning, it's going to happen in your lifetime, I'm afraid, Jim. So,
and then one of the things that should give all our listeners pause, the numbers have changed, but this is the one I remember. The average Social Security, Medicare beneficiary going to get $300 plus.
That's right.
paid in 100.
That's right.
That can't work.
That's right. And I've been preaching that exact same point for years, and the costs continue to increase.
Yeah.
And I've always maintained that's because we keep inventing more care, which is a good thing.
Yeah.
And everybody wants it, which is understandable.
But
and we live longer lives, but it costs money, and you hadn't paid for that.
Yeah, we'll let Alex pay for you and I, but we're not going to pay, right? And she's going, what the heck are these guys talking about? Let's shut them down.
But that's the practical reality of all this. And if you even talk about it, you get your political head cut off.
Remember Moynihan, the third rail politics?
I do. That's exactly what it is. But it's upon us.
Yeah, and then we got to solve it on our terms, or somebody will do it for us.
Absolutely. Jim, good talking to you, sir. Appreciate you coming on, and glad to finally meet you.
And then look forward to doing this again.
Yes, sir. Jim Leggette, lecturer of economics at Mississippi State University, has been our guest here on Middays. We're at Sally Kate Winters Family Services. Don't forget, you can donate at sallykatewinters.org. I see the lunch over there provided today by Sweet Peppers Deli in Columbus and the tea by Milo's. We're coming right back with more. Stay with us.